Good day, I am RJ Felix from BSMA 4-4 and I am here to present to you the 6 steps in decision making. Upon scanning the book, I saw that there are 6 key concepts alongside with the 6 steps that I've gathered through the internet. Starting with the first key concept, which is every decision involves choosing from among at least 2 alternatives. With that, we can already come up with the first step in decision making, which is defining each alternatives being considered. So once we already know what are the alternatives that we are considering, we can already come up to a decision, which is better or which is more beneficial for the organization. And meron tayong example here which is make or buy decision, kung dapat ba nating company na mismo ang gagawa or dapat na lang mag-acquire sa ibang companies. We also have the keep or drop decision, kung dapat pa ba nating i-keep o ipagpatuloy yung paggawa ng product na yon or kailangan na nating i-drop as we are already experiencing losses through that product. In the next slide, we have here the second step, which is identify the criteria for choosing among alternatives. In here, we have relevant costs and relevant benefits. They are the ones being considered when making decisions. We also have the irrelevant costs and irrelevant benefits. They are being ignored. So basically, when making decisions, dapat alam natin kung ano pa yung mga isasali natin o i-keep to make the decisions and kung ano na dapat yung mga ipapasintabi o aalisin natin to save time, to save effort, and to make that decision more efficient. In the third key concept, it says here that differential analysis is the key to a effective decision making, focusing on the future costs and future benefits that we can derive from the alternatives that we are choosing from. So in simple saying, differential cost is a irrelevant cost. Differential revenue is a relevant benefit. So in making decisions, we should consider one of the most important things, which is the differential cost and the differential revenue. It will really help the managers or the decision makers to weigh which is a really more effective or which is really a better option among the alternatives that we are choosing from. Moving on with the fourth key concept, which is sunk costs are always irrelevant when choosing among alternatives. So alam na nating lahat kung ano nga ba yung sunk cost. So sunk costs are expenses that has already been incurred in the past and cannot be changed in the future. So when making decisions, isa-set aside natin ang sunk cost as it will not affect decision making and as it will not affect the alternatives that we are choosing from. They are irrelevant. We have here now the fifth key concept, which is future costs and future benefits that do not differ between 2 alternatives are irrelevant in the decision-making process. So kapag naka-encounter tayo ng future cost and future benefits na hindi naman nag-iiba yung dalawang alternatives, we should ignore them. So para silang sunk cost in the past key concept na hindi natin o isa-set aside natin. Basically, para silang sunk cost na may encounter natin in the future. So we should ignore them. Again, to save time, to save effort, and to formulate strategies that are more effective. After defining the alternatives being considered, identifying the criteria, knowing that differential analysis is the key, knowing that sunk costs and future benefits that do not differ between 2 alternatives are being ignored, we will now come up with the 6th step in decision making, which is to take action. But before that, it also says here that we should consider opportunity cost when making decisions. Why is that? Kasi when we are talking about opportunity cost, we are talking about a potential benefit that we can derive when choosing one alternative over the other. And opportunity cost will really help the decision makers, which is really a more beneficial or which is really a better decision or better option among the alternatives that being considered. That's it for that steps in decision making. Hope you enjoyed and learned something. Bye!
Good day, everyone. I am Mateo Krishma de la Cruz from BSMA 4-4, and today's report is all about relevant costs and benefits. So in this topic, opportunity cost and sunk cost is discussed. So sunk cost is basically the cost that has been already incurred and cannot be recorded, On the other hand, opportunity costs are the foregone benefits by choosing an alternative course or action. An example cited here is the salary you could make if you remained on the workforce rather than choosing going into business. So the major purposes of managerial accounting is for decision making and control and evaluation. For further analysis, let's take on the example given by the PowerPoint. So the example says that the copy center hours are currently from 6 a.m. to 8 p.m. The student union is trying to determine whether they should extend the closing time from 8 p.m. to 12 midnight. The manager estimates the revenue will increase by $800 per day if he extend hours, but he will have to pay a part-time worker for 4 additional hours at $20 per hour. Additional paper toner and other miscellaneous costs of $500 will be incurred, and finally utility costs will be increased by $10. So the option is, should the manager extend the hours? So the estimated costs are listed in the PowerPoint presentation. Incremental revenue per day is $800, while the sum of the incremental cost per day is $590. So the incremental profit is $210. So the other option is, should the manager stay open until 2 a.m.? So if the store opens from 8 p.m. to 2 a.m., the additional costs and revenues are, so the additional incremental revenue per day is $70, while the additional cost per day is $72, which will result to an incremental profit of negative $2. So here is the illustration. The total cost of operation time of 6 a.m. to 2 a.m. So we have here the incremental revenue per day of $870 and the total incremental cost per day of $662 and the incremental profit of $208. So the option here is whether they operate from 6 a.m. to 12 a.m., which has a revenue of $210,000. And the other one is if the manager should stay open until 2 a.m., which will result to an incremental profit of $208. So the manager must choose to operate from 6 a.m. to 12 midnight, because if he will operate from 6 a.m. to 2 a.m., the profit will be decreased by $2. So that's all for this report. Thank you.
Good day, ma'am. I am Elmi Ardayo from BSMA 4-4 and is under Group 3, and we were tasked to discuss about differential analysis. So for today, I will be discussing about the importance of differential analysis when it comes to decision whether to make or buy. So first, let's define what is a make or buy decision. A make or buy decision is an act of choosing between manufacturing a product in-house or purchasing it from an external supplier. So in layman's term, in the point of view of a company, whether they make their own products or buy it from outside supplier. So that's the make or buy decision. In here, we can associate it with the term value chain, wherein it refers to the various business activities and processes involved in creating a product or performing a service. So say for example, a company is producing a bandana. So in producing that bandana, it composes a lot of processes or activities. For example, the activity of purchasing raw materials, and then the inclusion of direct labor or the workforce, as well as the inclusion of overhead. So that's the work in process. And then after work in process, magiging finished goods siya. And then that finished goods will be transported or shipped to different retailing outlets or stores. And then a company also has a post activities kagaya ng selling at saka advertising activities. So yung mga activities na yon or processes in making that specific product is what composed the value chain. So what do we call a company if it has control over 2 or more phase or processes of that production? So what if a company controls more than one phase or processes within the production of the product? So dito na papasok yung vertical integration, wherein it refers to the process of a company that opts for vertical integration takes complete control over one or more stages in the production or distribution of a product. So going back sa previous example natin kanina na yung bandana, so if a company has control in more than one phase or process of that product, for example, yung purchasing of raw materials, tapos control pa ng company yung advertising, tsaka yung selling, then that company is a vertically integrated company. In here, we have the advantages of vertical integration. First, it allows an ensured and smoother flow of purchased parts and materials for production. So mas maganda na yung country or yung company ay may control dun sa product na gagawin niya. For example, instead of buying sa outside supplier, mas makakasiguro yung company kung gagawin na lang niya, kasi minsan, if you're gonna buy it from your outside supplier, minsan nagkakaroon ng scarcity. Second is to control better quality by producing their own products. So, if you're gonna make your own product, mas makakasiguro ka na mas mababantayan mo yung kalidad ng product na gagawin mo instead of buying it from outside suppliers. And last is to realize profits. So if we're gonna buy it from outside suppliers, syempre may markup yan. So it would be better if you're gonna make your own products for you to maximize the true potential of your profits. So let's proceed naman sa company if they opt to choose non-vertical integration o kaya bibili na lang sila sa outside supplier. One advantages of non-vertical integration company are the economies of scale. These economies of scale are cost advantages reaped by companies when production becomes efficient. Companies can achieve economies of scale by increasing production and lowering costs. This happens because costs are spread over a larger number of goods. Costs can be both fixed and variable. So in here naman, this is advantageous sa part ng outside supplier because the more products they make, of course, the lesser cost na mai-incur nila because the production is maximized. So yung cost is inversely minimized. So let's take a look at an example of a make or buy decision. In here, we have the data of a certain company with its expenses. Say for example, yung bandana kanina. A company would incur these following expenses. Direct materials of 7 pesos per unit. Direct labor 5. Variable overhead 2. Supervisor salary 4. Depreciation of equipment 2. Allocated general overhead 6 for a total cost per unit of 26. If the company is planning to produce 10,000 units of bandana, then the company would incur 260,000. So we have here making their own products, it's 26 per unit. But a certain supplier offered them 23 pesos per unit. So, should the company accept that offer already? Kasi syempre, makakamura siya ng 3 pesos if he's gonna buy from outside supplier. But, we should identify first the relevant and non-relevant costs. So, sa given data kanina, we have the direct materials, direct labor, variable overhead, tsaka supervisor salary considered as relevant costs because these costs are avoidable costs. Why do I say so? Because if we're gonna buy from outside supplier, we can avoid incurring these expenses instead of making on our own. So these are avoidable costs, and we all know that avoidable costs are relevant costs. Next, the depreciation of equipment. This is an irrelevant cost because this cost is a sunk cost. We all know that sunk cost is a cost that has been incurred and cannot be recovered already. As well as yung allocated general overhead, which is yung treatment niya is a common or a general cost, making it an irrelevant cost in our decision whether to make or buy. So we have here the final cost, the direct materials, direct labor, variable overhead, supervisor's salary. Itong items lang na ito, yung mga relevant costs. So they have the total cost of 180,000 for 10,000 units. And then yung offer ng outside supplier is 230,000 pesos. So what should the company choose? Of course, it is obvious. The result shows it all. Kailangan ng company na kailangan sarili nilang gawin yung product nila because it would give them a financial advantage of 50,000 compared sa offer ng outside supplier. Now, is this all of the relevant financial information? Of course not. Let's try looking at one last factor, which is the opportunity cost. We all know that opportunity costs are potential benefit given up when we choose one alternative over another alternative. So sa previous discussion kanina, we're gonna be making our own bandana which would cost us 180,000 compared if we're gonna buy it from outside supplier which would cost us 230,000. Thus, giving us a financial advantage of making our own products of 50,000. But, say for example, yung space na ginagamit natin in making our bandana could be used for another purposes. Say for example, yung another product which is belts. And then, if we're gonna use that space in making belts, it would incur a segment margin of 60,000. But since we're already using it in making our bandana, of course, hindi natin ma-achieve yun. Thus, making that an opportunity cost because the benefit of achieving 60,000 is already given up kasi nga, while already making our own bandanas instead of making another product which is the belt. So, we're gonna be adding the opportunity cost of 60,000. So in here, we're gonna be having a different approach. So sa make kanina, we have a financial advantage of 50,000. But since we're gonna be incurring an opportunity cost of 60, i-add natin yon 180 plus 60 for a total of 240. So now, our final decision would vary. Kanina gagawin natin. But for now, since mas magkakaroon tayo ng financial advantage if we buy from outside supplier, yun yung decision na pipiliin natin because buying from outside supplier would give us a financial advantage of 10,000 pesos when compared to making our own, which is 240,000 pesos.
So hello, my name is Milet Cruz, and the topic that I will discuss to you is all about special order decision. So first, let me discuss to you what is a special order. Special order is a unique one-time order that is not considered part of the company's normal ongoing business. Therefore, this is an additional opportunity to generate more revenue above sales goals. Special order typically requests for a lower price than normally offered and might include additional costs. So when faced with a special order decision, a company should consider the following items. First, does the company have the excess capacity to fulfill this order? Remember that the special order is not considered part of the company's normal ongoing business. So, the company must make sure that there is excess capacity to fulfill this order without harming the original plan for the year. Next is, will the order be profitable? Typically, special order will have a reduced price or additional cost. So ask yourself if the price will be enough to cover the incremental costs associated with the order. Think back to overhead allocation. When overhead allocation rates were developed at the beginning of the year, they were based on the planned production. These special orders are in addition for the planned production. Therefore, the fixed overhead will not be applied to these jobs. This allows the company to make the product needed for the special orders at a reduced cost. Although the price might be lower, the company may be able to achieve profits to the job. And the last item to be considered is, will the order affect the sales now or in the future? The company must ensure that the special order will not hurt the other sales. It is important to make sure that the customers requesting the special order does not compete with the existing customers or the company itself, which would result in decreased sales at regular prices. Special order can also lead to unhappy existing customers if they find out about the special deal that you gave to someone else because of the lower price. Careful consideration must be made when accepting special order to protect current and future profits. For illustrations, here is an example of special order decision scenario. If Joraki Incorporation receives a request for a special order to make 50,000 special pens for a neighboring college for $30 for a pen per pen, the order is for only 1 month, upon which the college will have pens and surplus for its staff. The current cost of producing a pen is $30, given the variable cost of $10 and the fixed cost of $20. Joraki Incorporation sell its pens to various wholesalers at $50 a pen. Currently, Joraki Incorporation makes 400,000 pens per month and its factory capacity is 500,000 pens a month. Do you think Joraki management should take the order? So to determine if Joraki's management should take the order or not, let's apply the 3 items that I mentioned in the discussion earlier. Number 1, does the company have the excess capacity to fulfill this order? In the example, if Joraki management accepts the special order, the total pens to produce will be 450,000 and its factory capacity is 500,000 pens. Therefore, there will be an excess capacity to fulfill this order. So, number 1 is checked. So, let's now proceed to number 2, which is, will the order be profitable? To determine if the special order is profitable, we use the incremental analysis approach. Take note that the total pens without special order is 400,000, while the total pens with special order is 450,000. The normal selling price is $0.50 and $0.30 per pen for the special order. So based on the incremental analysis table, if Joraki Incorporation accept the special order, it will have a profit of $90,000. But if the company rejects the special order, it will only have a $80,000 profit. So the difference is $10,000. So for the answer to number 2 is yes, the special order is profitable. So for the last item to be considered, which is, will the order affect the sales now or in the future? Since Joraki Incorporation sells its pen to various wholesalers and the special pens is for the neighboring college, it probably doesn't affect the sales of the company. So to summarize the decision, Joraki Incorporation should accept the special order since the company has the excess capacity to fulfill the orders. Second, it is profitable, and the last is it doesn't affect the sales of the company.
Hello, I'm Beverly Kumaya from BSMA 4-4 and tasked to discuss the constraint resources. So under constraint resources, it has two objectives. First, to determine the most profitable use of a constraint resource, and to determine the value of obtaining more of the constraint resource. Volume trade-off decisions. Companies are forced to make volume trade-off decisions when they do not have enough capacity to produce all of the products and sales volumes demanded by their customers. In these situations, companies must trade off or sacrifice production of some products in favor of others in an effort to maximize profits. What is a constraint? A constraint is anything that prevents you from getting more of what you want. So every individual and organization faces at least one constraint. For example, you may not have time to study thoroughly or a time to go out with your friends on weekends, so time is your constraint. Another, long waiting periods for surgery are a chronic problem of National Health Service, so limited lang yung number ng pasyenteng pwede sa isang araw. So sa surgery, 15 patient lang ang pwede in a day. Tas sa referral, 100 patient per day lang ang i-accommodate, ganun din sa appointment. Constraint or bottleneck in the system is determined by the steps that limits total outputs. When a limited resource of some type restricts the company's ability to satisfy demand, the company is said to be constrained. So sa example ko, hindi pwedeng lumagpas sa 15 katao yung masa-surgery. So kahit anong gawin nila, kailangan nilang mag-focus sa constraint para magkaroon ng improvement, which is sa surgery. Kasi maximum number of patients to be treated na yung 15 patient nila for surgery. So in a business process, such as process for serving surgery patient is like a chain. Kasi diba sa chain, para hindi maghiwalay or ma-break, kailangan mong mag-focus sa weakest link sa chain. So clearly, focusing your effort on the weakest link will bring the biggest benefit. So these are the procedure to strengthen the chain. First, identify the weakest link. So sa example natin, the constraint or the weakest link is a surgery. Second, do not place a greater strain on the system than the weakest link can handle. So mas marami yung na-accommodate which leads to long waiting lists. Third, concentrate improvements efforts on strengthening the weakest link. So, paano ba mag-i-increase yung number of surgeries that can be performed in a day, which is 15 only? And last, if the improvement efforts are successful, eventually, the weakest link will improve to the point where it's no longer the weakest link. So may bago ka na namang link na weakest kasi na-improve na yung dati. Kaya at that point, the new weakest link must be identified and improvement effort must be shifted over to that link. This simple sequential process provides a powerful strategy for optimizing business processes. Utilizing a constrained resource to maximize profits. Managers routinely face the challenge of managing constrained resources in a manner that maximizes profits. When companies face these types of constraints, their managers must decide which product or service make the most profitable use of those limited resources. Fixed costs are usually unaffected in these situations, so the product mix that maximizes the company's total contribution margin should ordinarily be selected. So fixed costs remain the same regardless of how a constrained resource is used. Kaya yung mga managers, they should ignore the fixed costs when making volume trade-off decisions. Instead, dapat focus sila sa pag-a-identify ng mixed products that maximizes total contribution margin. So when a constraint exists, it's already given that some products must be cut back. And to utilize constraint resource, kailangan ma-maximize yung total contribution margin. A company should not necessarily promote those products that have the highest unit contribution margins. Rather, total contribution margin will be maximized by promoting those products or accepting those orders that provide the highest contribution margin in relation to the constraining resources. Yung ginagawa kasi ng karamihan, pinipili nila yung product na may highest unit CM. Pero mali yun. Dapat, yung product that provides the highest contribution margin per unit of the constrained resources. So to illustrate, let's discuss this example. Ensign Company produces 2 products and selected data are shown below. So the product 1 and the product 2. So the product 1 appears to be more profitable kasi its contribution margin is $24 compared to product 2 which is $15 and the CM ratio 40% for product 1 and 30% for product 2. Machine A1 is the constrained resource and is being used at 100% of its capacity. There is excess capacity on all other machines. Machine A1 has a capacity of 2,400 minutes per week. So the bottleneck here or the constraint here is the machine A1. Nililimit ng machine A1 yung overall output sana. Kaya siya constraint. So question, should Ensign focus its efforts on product 1 or product 2? But before that, let's try to answer some problems first. How many units of each product can be processed through machine A1 in 1 minute? So how many units of each product can be processed through machine A1 in 1 minute? So the answer is B. Product 1 produce 1 unit equals to product 2 that produce 2 units. Bakit? Kasi 'di ba sa table, in 1 minute, isang unit ang kayang ma-process ng machine sa product 1. Well, sa product 2, 30 seconds, which means 2 unit na yung kaya nitong i-process in 1 minute. Kaya yung sagot, 1 unit sa product 1 and 2 units sa product 2 in 1 minute. Next, what generates more profit for the company? Using 1 minute of machine A1 to process product 1 or 1 minute of machine A1 to process product 2? So what generates more profit for the company? Using 1 minute of machine A1 to process product 1 or using 1 minute of machine A1 to process product 2? So the answer is using 1 minute of machine A1 to process product 2. So this is the explanation, bakit product 2. In 1 minute of machine A1, Ensign could make 1 unit of product 1 with a contribution margin of $24. So 2 units of product 2 naman, each with a contribution margin of 15 per unit. So in 1 minute, $24 ang CM ng product 1. Then sa product 2, in 1 minute, ang CM niya is $30. $30 kasi in 1 unit, 15 per unit yung CM niya. Pero in 1 minute kasi, 2 units na yung kayang i-produce na product 2. Kaya 30. 30 ang contribution margin niya in 1 minute. So makikita natin dito that 30 is greater than $24. The key is the contribution margin per unit of the constrained resource. Ayan, so nalaman nating less profitable si product 1. So, Ensign should emphasize product 2 because it generates contribution margin of 30 per minute of the constrained resource relative to 24 per minute for product 1. So, though mas malaki yung CM per unit and CM ratio ni product 1, product 2 naman yung nakapag-provide ng larger CM in relation to constrained resources. So, Ensign can now maximize its contribution margin by first producing product 2 to meet customer demand and then using any remaining capacity to produce product 1. So, let's see how this plan would work. So, diba, machine A1 nasa capacity of 2,400 minutes per week. Tas yung weekly demand ni product 2 is only 2,200 units. So, para makuha natin yung total time required to make product 2, i-multiply natin yung weekly demand, which is 2,200 units, sa time required per unit, which is 30 seconds or 0.50 minutes. Kaya makukuha natin yung total time required to make product 2 na 1,100 minutes. So therefore, to maximize profit, they should produce all the demand of product 2 and use the remaining capacity sa product 1. So 1,100 minutes na sa product 2. So yung natitira doon sa 2,400 minutes, less mo yung 1,100 minutes, so yung 1,300 minutes na lang yung available para sa product 1. Profit would be maximized by producing all 2,200 units demand for product 2. So ilang units na lang yung kayang i-produce sa product 1, given na 1,300 minutes na lang yung time available. So to compute, time available for product 1 times the time required per unit is equal to 1,300 units. So sa naunang table, sabi doon yung weekly demand ng product 1 is 2,000 units. Pero dahil may constraint at kailangang i-utilize yun while maximizing profit, and nakita naman natin na mas profitable yung product 2, so uunahin nating i-produce yung lahat ng demand ni product 2 na 2,200 unit. Then yung matitirang time sa product 1 naman. So yan, according to the plan, we will produce 2,200 units of product 2 and 1,300 of product 1. So with this product mix, Ensign Company can earn a total CM of $64,200. So sa product 1, total CM is $31,200, while sa product 2, $33,000. So sa example na diniscuss natin, it clearly shows that looking at each product's unit CM alone is not enough. The contribution margin must be viewed in relation to the amount of the constrained resource each product requires. So dinagdag ko na lang din dito sa discussion ko yung summary ng steps kung paano natin ma-determine yung mas profitable use of a constrained resource. So first, calculate each product's contribution margin per unit. Second, identify the constraining resource and the quantity of that resource that is consumed to make 1 unit of each product. Third, calculate each product's contribution margin per unit of the constraining resource. And last, rank the products from the highest contribution margin per unit of the constraining resource to lowest. And that's the end of my presentation. Once again, I'm Beverly Tanglod Kumayao from BSMA 4-4. Thank you and God bless.
Managing constraints. The implications are clear. Managers should focus much of their attention on managing bottleneck. That's why it's possible for a manager it can increase the capacity of a bottleneck, which is called relaxing or elevating the constraints in numerous ways such as working overtime on the bottleneck, subcontracting some of the processing that would be done at the bottleneck, investing in additional machines at the bottleneck, shifting workers from the non-bottleneck processes to the bottleneck, focusing business process improvement efforts on the bottleneck, and reducing defective units processed through the bottleneck.
Hi guys, ako si Hans Alfred Ermitanyo at ang topic na napunta sa akin ay ang sell or process further. Whether joint product should be sold at a split off point or process further. So bago natin puntahan ang sell or process further, kailangan muna nating malaman kung ano ang joint products, split off point, at saka sell or process further decision. So joint products, in some industries, 2 or more products known as joint products are produced from a single raw material input. While sa split off point, the point in the manufacturing process where joint products can be recognized as a separate product. While ang sell or process further decision is a decision as to whether a joint product should be sold at the split off point or process further. So let's take a look sa diagram. Dito makikita natin na merong isang joint input na merong mga common production process. Pero sa split off point, maraming mga separate products ang nailagay kagaya na lamang ng oil, gasoline, at saka chemicals na pwedeng ibenta. So ano nga ba yung mga pitfalls ng allocation? Joint costs are traditionally allocated among different products at the split off point. A typical approach is to allocate joint costs according to the relative sales value of the end products. Although allocation is needed for some purpose such as balance sheet inventory valuation, allocation of this kind are very dangerous for decision making. So, tumungo tayo sa sell or process further. Many products can be sold in an unfinished state or processed further into a finished product that will sell for a higher price. The decision to sell or process should be based on incremental revenues and incremental costs. The cost of manufacturing the product to the sell or process decision point are sunk and therefore irrelevant. So in addition sa mas sinabi ko, joint costs are irrelevant in decisions regarding what to do with a product from the split off point forward. Therefore, these costs should not be allocated to end products for decision-making purposes. And another, with respect to all or process further decisions, it is profitable to continue processing a joint product after the split off point, so as long as the incremental revenue from such processing exceeds the incremental processing costs incurred after the split off point. So tumungo tayo sa example ng sell or process further. Sawmill Incorporated cuts logs from which unfinished lumber and sawdust are the immediate joint products. Unfinished lumber is sold as is or processed further into finished lumber. Sawdust can also be sold as is to gardening wholesaler or processed further into presto logs. So tignan natin yung additional info niya. Ito, data about sawmill's joint product includes The sales value at the split of point per log of lumber is $140, while per log of sawdust is $40. The sales value after further processing is $270 for lumber and $50 for sawdust. And the allocated joint product cost is $176 for lumber and $24 for sawdust. And the cost of further processing is $50 for lumber and $20 for sawdust. So tumungo tayo sa next slide. Dito hahanapin natin yung cost of further processing at saka financial advantage or disadvantage of further processing ng lumber at saka sawdust. So sa next slide makikita natin ng cost of further processing ng lumber is $50 while sawdust is $20. At saka yung financial advantage or disadvantage of further processing ng lumber is 80 while sawdust has a deficiency of 10. So yung lumber should be processed further and the sawdust should be sold at the split of point. So tumungo na tayo sa next slide. Fast Track has 40,000 partially completed units of product queue that can be sold for a total of $50,000. Fast Track also has the opinion of further processing the 40,000 units of product queue to obtain products X, Y, and Z. Processing the units further will cost an additional $80,000 and will yield total revenues of $150,000. So what should Fast Track do? First, we need some additional information that is on the next slide before we can make a decision. The incremental income from processing further is $70,000. This is greater than the incremental income of $50,000 that would be earned from selling product Q as is. Therefore, Fast Track should process further. By doing so, it will earn an additional $20,000 of income, which is $70,000 less the $50,000. The $30,000 of previously incurred manufacturing costs are excluded from the analysis. These costs are sunk and they are not relevant. They are not relevant to the decision. The benefit to processing further is $20,000. So, need pa natin ng other example. So, tumungo tayo sa another example. So, $10,000 of manufacturing costs have been incurred to produce product alpha. Alpha can be sold as is for $30,000 or processed further into two separate products, BB and CC. The further processing will cost $15,000 and the products BB and CC can be sold for total revenues of $60,000. The incremental revenue is $30,000 if you sell the product as is. If the units are processed further, they can be sold for $60,000. There is no incremental cost if we sell the product as is. But if we process the units further, the additional cost will be $15,000. The incremental income, if we sell the unit as is, $30,000 versus $45,000 if the units are processed further. So the decision is alpha should be processed further. Doing so will yield an extra earn of $15,000, which is $40,000 less the $30,000 of income. So need pa natin ng other example. Punta tayo sa next slide. $5,000 of manufacturing costs have been incurred to produce product Delta. Delta can be sold as is for $150,000 or processed further into two separate products, YY and ZZ. The further processing will cost $70,000 and product YY and ZZ can be sold for total revenues of $200,000. If we sell the unit as is, incremental revenue is $150,000. If they're processed further, incremental revenue is $200,000. There is no additional cost if you sell the units as is. The incremental cost if the incremental cost if the units are processed further is $75,000. Incremental income if we sell the units as is, $150,000 versus incremental income if the units are processed further, $125,000. So delta should be sold as is. Doing so will yield an extra $25,000, which is $150,000 less the $125,000 of income.
Good day, ma'am. I am Jamaica E. Estrada from BSMA 4-4. We, the Group 3, are assigned to discuss about differential analysis and its use in decision making. So for today, I will be discussing on whether to add or drop a product line and other segments. Adding or dropping product lines and other segments. The most difficult but important decision that a manager has to make is whether to add or drop a business segment. Any final decision to drop a business segment or to add a new one hinges primarily on its financial impact. To assess this impact, costs must be carefully analyzed. Now, let us examine the given illustration. A company has three product lines, product line A, B, and C. The company is thinking of discontinuing product line C because it is reporting a net operating loss. The company assumes that by dropping product line C, it would increase the company's overall net operating income by 4,500 pesos. The following information is available. In this scenario, the two alternatives under consideration are whether to keep the product line that reports a loss or to drop it. We can see that product line C generates the lowest contribution margin among all the other product lines. If this product line is dropped, then the company will lose 20,000 pesos per month in its contribution margin because all of these segment sales and variable expenses will be eliminated. Compared to its contribution margin, its total fixed cost is higher. That's why it resulted to a net operating loss of 4,500 pesos. To determine whether to keep or drop a product line or segment, here are the 3 steps to quantify the financial advantage or disadvantage of discontinuing a business segment. Step 1. We must calculate the contribution margin that would disappear if the segment is dropped. But remember to put this number in parentheses to denote it as a cash outflow. Here is the contribution margin of the 3 product lines, which amounted to 100,000 pesos, 80,000 pesos, and 20,000 pesos respectively. Since product line C is the segment that the company is planning to drop, we get its contribution margin of 20,000 pesos. But as I have said, put this amount on a parenthesis to denote it as a cash outflow. So the contribution margin if the product line C is discontinued is equal to negative 20,000 pesos. Step 2. Calculate the fixed cost that would be avoided if the segment is dropped. Compared to this first step, do not put this number in parentheses to denote it as a cash inflow. As we can see, all the fixed costs are determined whether it is avoidable or not. We only need to determine how much would be avoided if the segment is dropped. Salaries expense are labeled as avoidable because these are the salaries paid to employees working directly on the product line, and all employees working in product line C would be discharged if the product line is dropped. Next is the advertising expense, which are advertisements that are specific to each product line, and these are avoidable if product line C is eliminated. Last is the insurance expense, which is for insurance carried on inventories within each of the three product line. Inventories will be liquidated and insurance premiums will decrease proportionately if product line C is dropped. All other fixed expenses are not avoidable. With this information, management can determine that 11,500 pesos of the fixed expenses associated with the product line C are avoidable and 13,000 pesos are not. So, the fixed expense that can be avoided if the product line C is discontinued is equal to 11,500 pesos. The last step is to add the amounts from steps 1 and 2. If the result is negative, which denotes a net cash outflow, do not drop the segment. But if the result is positive, it denotes a net cash inflow, then drop the segment. The question here is, should the company keep the product line C or drop it? As we have determined that the contribution margin that will be lost if the product line C is discontinued equals to negative 20,000 pesos, added to the fixed expenses that can be avoided if the segment is dropped, which is 11,500 pesos. It will result to a negative amount of 8,500 pesos. Since the fixed costs that can be avoided are less than the contribution margin that will be lost, the company's product line C should not be discontinued or dropped unless a more profitable product line is proposed. The answer can also be obtained by preparing a comparative income statement, or also known as comparative income approach, showing results with and without the segment. Now, let's examine this second approach. The sales of 60,000 pesos will be lost, that's why it is denoted as negative, and also the variable expense of 40,000 pesos will be eliminated. That will result to a decrease in contribution margin of 20,000 pesos. The salaries of the product line C employees, advertising expense of the specific product line, and the insurance of the inventories within the product line are relevant to the decision because these costs will disappear if the product line C is dropped. Next are the utilities expense that represents utility cost for the entire company. Depreciation is considered as a sunk cost. Sunk costs are always irrelevant when choosing among alternatives because it is a cost that has already been incurred and cannot be changed regardless of what a manager decides to do. Rent expense represents the rent for the entire building in which the company operates its business. The general administrative expense represents the cost of accounting, purchasing, and general management, which are allocated in the product lines, are irrelevant even if the product line C is dropped, because these costs cannot be avoided or affected by decision to drop the segment. As shown in the last column, if the product line C is dropped, then the overall company net operating income will decrease by 8,500 pesos each period. Same answer with the previous formula or solution. Next is that we use the segmented approach to estimate the profitability of the product lines. It gives us a much different perspective of the product line C compared to the first two approaches. Segmented approach. Beware of allocated fixed costs. As we can see in the table, the product line C is covering all of its traceable fixed costs and generating a 6,500 pesos segment margin towards covering the common fixed costs of the company. So, if the product line C would be dropped, the company will lose the 6,500 pesos segment margin generated by this product line. There is also the 2,000 pesos depreciation, which is considered as a sunk cost that cannot be avoided. In addition, the sum of these two amounts, which is 6,500 pesos and 2,000 pesos, is equal to 8,500 pesos, equal to the financial disadvantage if product line C is discontinued. That's all for today, ma'am, and thank you.